Hello, and thank you for joining us for our Finovate webinar, Building the Foundations for Next Generation Technology to Transform Customer Experience. My name is David Penn. I'm a research analyst with Finovate. Joining me for today's discussion are Virginia O'Shea, she's the CEO and founder of Firebrand Research, and Joe Lichtenberg, who is responsible for product and industry marketing for data platforms at InterSystems. Thank you both, Virginia and Joe, for joining us today.
Thanks, David. Great to be here.
My pleasure.
Fantastic. I thought before we began, maybe each of you could tell just a little bit about yourselves and the work that you do. We'll start with you, Virginia.
Sure, happy to. I'm the founder of Firebrand Research. It's a research advisory firm focused on capital markets, technology and operations. And for my sins, I've been spending, I guess, about 20 plus years looking at the plumbing and regulation and data and all of these exciting topics across the financial services sector.
Fantastic, fantastic. Thanks for being here. And Joe, yourself, please.
Sure, thanks, David. I'm Joe Lichtenberg. I'm Global Head of Product and Industry Marketing for InterSystems. If our viewers are not familiar with InterSystems, we're a technology company. We've been in business for 45 years. We have thousands of customers around the world with a heavy emphasis in financial services. And for us, our sweet spot is working with our customers around a whole range of different data and analytics initiatives that create business value. And it's especially around being able to leverage large volumes of disparate and disconnected data in really two different kinds of categories. One is around decision support, so helping employees and executives in the company make better business decisions in the moment. And the second category is around automating and streamlining critical processes and workflows throughout the business.
Interesting. And we're going to be talking quite a bit about customers today, for sure. Virginia, I'm going to give you the first question. We've got a lot to cover, so let's jump right into it. Customers have always been an integral part of financial institutions. The customer experience and the financial institution experience, very, very key. We're seeing a lot of financial institutions embark upon digital transformation projects. And one of the things I'm curious from your perspective is how well these financial institutions are doing, making sure that customer experience is enhanced as part of this transformation process, as opposed to compromised or even worse, made complicated.
Sure, I think it's not just a technology issue here, it's a cultural change. So moving from a very product-centric way of looking at the world to moving to a client-centric view of the world isn't necessarily as easy as it sounds. And I think a lot of the supporting technologies that firms are using has been helpful, but it hasn't necessarily transformed the operations as much as they could have done. It's very much a journey. I think that you use the word digitalization journey. It's certainly for both the entity and the product side. We've seen things like the pandemic accelerated things. We had to move from a face-to-face interaction sort of mode of working to very much a digital one, and now we're firmly in the world of the hybrid, I would say. And there's been a lot of focus on client experience when it comes to industries like retail outside of financial services over the last couple of decades, and financial services was a little late to the table, I would say, in terms of looking at the client as the center of the universe. So it sort of started in the retail banking side, it's moved into the retail brokerage side where the most progress has been made. We're seeing progress somewhat slower on the institutional side, and the channels are remaining pretty inconsistent with regards to client contact. There's a lot of proprietary portals in certain areas, and there's reliance on channels such as email, unfortunately. So we've moved leaps and bounds in certain bits and pieces, but not everywhere. And what's been changing, I guess, the dynamic has been increased competition and new entrants that have driven transformation. So generally, when it comes to big things like this, it's usually driven by external factors, such as the pandemic, such as new entrants. I think overall front ends are a bit sleeker than they once were. The thing is, when we get to the back end of everything and bringing all this data together, there's still a big silo problem, because if you've added more digital channels, that's more channels and more data related to clients that you're having to sift through for insights and to be able to understand patterns of behavior and understand your client in a better way. And we've also deployed new CRM systems that must be patched together for, and there's compliance requirements that have been introduced. So I think overall from the overall view of the client is generally very siloed still, and cultural silos, as I say, are just as bad as the physical silos to address. So it's relatively challenging still, but we've made some progress, right?
Absolutely, absolutely. A number of interesting points you brought up there about the hybrid nature of things, the aspect of culture being as, if not maybe even more important in some respects than technology. Joe, I'd like to ask you, following up on what Virginia was talking about, clearly an appetite for better customer services brought on by a number of things, as she mentioned, outside factors, new entrants, competition, that sort of thing. I'm wondering if maybe you could outline what the prize is, what the benefits are for those financial institutions that do make this pivot and do pursue this mission of really making customer service something special.
Sure. And obviously we do a lot of this with our customers as well. So I mean, obviously there's a lot of benefits to improving customer service and improving customer relationships. And I agree that we're seeing it as well. It's definitely top of mind with financial services firms right now with our customers. And in fact, I just read in the latest Gartner survey of financial services firms, they asked the firms where they're focusing their digital initiatives now. And the number one area of focus that they reported to Gartner is around improving customer engagement. And so, you know, in large part, it's around meeting heightened customer expectations based on what customers are used to, you know, really in general with digital interactions in all areas. But certainly the bar has been raised both by fintechs and startups in financial services, as well as from established financial institutions. And, you know, our customers are really seeing that. And that, you know, one of the things that they're very aware of is that it's easy now for their customers to leave and go to a competitor that provides better customer service. And so, you know, making sure that you're providing both the services that your customers want and meeting their expectations around ease of use and ease of access is critical. And by the way, you know, as your customers use more of your services, the less likely they are to churn. So being able to target your customers to, you know, one, generate incremental revenue from cross-sell and upsell opportunities and gain a larger share of wallet. And also keeping your customers engaged with multiple service offerings, you know, is really important. Those are some of the benefits. And then, you know, we know it's a lot cheaper for a firm to keep their existing clients and assets under management than it is to go and bring in net new clients and customers. You know, we're seeing benefits in terms of hyper-personalization, not only in terms of increasing customer stickiness and cross-selling, but also obviously in attracting net new customers as well. So you know, the benefits that we see are around increasing revenue and market share and increasing assets under management, customer stickiness, competitive differentiation. So we call all of these solution areas that are providing these benefits, we refer to this as our customer 360 set of solutions. And we're doing a lot of this work with our customers. You know, we also see in customer 360, there's benefits around also reducing risk and ensuring regulatory compliance and KYC and reducing fraud and so on, around having, you know, really an accurate and real-time 360-degree view of customers. So there's probably, David, more benefits that I haven't thought of, but top of mind, that is where we tend to be engaged with our customers.
Yeah, that's quite a list of benefits, and some of them really do stick out, particularly for me, just that notion at the same time we're offering more opportunities for folks to be able to move around and change, it really ups the ante for financial institutions to figure out how to have that happen too much. And you mentioned things like the price of engaging customers versus the price of trying to get new customers. And we hear about that so much in fintech in particular, about new customer acquisition and those costs, and just realizing just how important it is for folks to hang on to the customers that they have as well as get new ones. Virginia, I want to turn to you. We've talked about new entrants in fintech. You've mentioned it. Joe's mentioned it as well. I think one question that maybe bedevils some folks is, how is it that you have all these new entrants basically start from zero and to move into providing these services so quickly when you had traditional banks, capital markets firms who had all this customer data sitting there at their fingertips all along? How did they get lapsed so easily?
I mean, I think a lot of it's to do with the fact they're not hampered by some of the things that the legacy organisations, the incumbents are, and you know, data silos exist. And they can be challenging in terms of pulling together information about a single client. Single client view has been something many firms have been working towards for a really, really long time, not necessarily achieving it yet, which is, you know, it's a pain point. And certainly there's a lot of information buried across the organisation that could be very valuable in retaining existing clients. And as Joe mentioned, client stickiness has reduced over time as it's become easier to plug and play with different providers out there. Particularly in areas like retail banking, retail brokerage. And I think, you know, retail banking have been, you know, there's been neobanks for quite a long time now, decades. But there's much more new entrants in the retail brokerage space, you know, eToro, Robinhood, all of these guys are relatively new. I mean, if you think about the legacy of all the other people in that market, they're changing the dynamics and they're forcing firms to think about, you know, mobile means of communicating. I know that sounds very basic, but there's a lot of these things that are commonplace in retail banking that are not commonplace in brokerage. So I think we're now seeing a lot of pressure on firms to adapt and change. And the new entrants have just come from there are, you know, opportunities out there, and, you know, new digital offerings in terms of products as well. And that's another area that's sort of growing, tokenized assets and things like that. So there's always going to be new entrants. And I think incumbents really do have to try and up their game to make sure that they're fending off, you know, it's survival of the fittest here. I think we're seeing, you know, some regulation coming in for some of these fintechs and these new entrants, and so regulation is adapting and changing, but it's going to take time to catch up to innovation and technology change as it goes. And interestingly, we're seeing consolidation amongst some of the new entrants too, which is meaning that they also have silos. So as they grow and as they change and as they, you know, merge together, they're going to have the same problems that's been hampering the incumbents for some time. So that the new generation will be facing the same problems that the old generation or the incumbent generation have been facing for ages. So regardless of the players, or, you know, whether they're new or incumbents, they all need to focus on data to be able to retain their competitive edge. And that gives them the information at their fingertips to be able to, you know, develop the new products that they need to develop, to pitch them at the right organizations, make sure that they aren't, you know, falling foul of the regulator in terms of things like consumer duty in the UK, or, you know, all of these regulations that the SEC is putting in place for, you know, retail brokers as well. So I think there's a lot of things that you have to think about. You know, there's so many more changing factors here, and I think competition is high, but they're also changing too.
Virginia, I just want to say that's really interesting what you're saying with the fintechs now as they're maturing. That's exactly the innovator's dilemma that Clayton Christensen wrote about. That's exactly what's going on, right? So they're starting to see now some of those same sort of challenges around data silos and growth that the established financial services firms are seeing.
Absolutely. So I was thinking the similar sort of thing, that we're an extremely interesting juncture right now, where you're getting some of those traditionals are getting a sort of a second bite at the apple to sort of come back at them, while some of the new entrants are all of a sudden finding themselves facing yet newer entrants as well. Joe, you mentioned a minute ago when we were talking about some of the specific benefits that can come from this, and you mentioned a number of very specific things. I wonder if maybe you could also talk about some of the specific next generation technologies that financial institutions can embrace that can give them greater agility, greater capacity to innovate, to improve that customer experience.
Yeah, sure, and obviously we're very close to that. So there are a lot. I would summarize that in three areas. So one is around data and access to data and and having access to a lot of data and disparate data. And so we call that a connective tissue, right? So you need to be able to work with a lot of current data and historical data from different sources and get that into a consistent and usable format, right, in order to get good and accurate and current insights on your customers and your clients and your prospects. And David and Virginia, as you both accurately noted, right, this is one area where the established financial institutions actually have an advantage over many of the fintechs because they already have reams of historical data on their customers, that span, in many cases, years and sometimes decades. So that's one. Another is, there are new technologies that make it easier to create these real-time, intelligent, programmatic, event-driven, AI-enabled workflows to be able to serve your customers and prospects in real-time, sort of event-driven, intelligent, hyper-personalized ways. And then the third, obviously, is around advancements in analytics technologies. And yeah, as we know, that's a very broad field right now. So, what we see as important, one is around retrospective analytics, so that you can really deeply understand what has happened and why. Real-time analytics, so that you can understand what's happening in the moment. And then, of course, now with machine learning and advanced AI, predictive and prescriptive analytics. So, you can be informed about what's likely to occur, and then how to be prepared to either prevent it from happening if it's a sort of a risk item, or so that you can be prepared to fully take advantage of potential opportunities if they do occur, so that you're not blindsided by them. So, in terms of your question around next-gen technologies, there really are lots of sort of new and exciting technologies that are available in the market in these areas. But we do think that one of the most exciting advances that we see and that we're heavily involved with is in the area of enterprise data fabrics, or what we call smart data fabrics. And many of the leading analysts are now calling this area, enterprise data fabrics and smart data fabrics, the future of data management. And so what that's all about, it's a non-disruptive architecture. It's a set of technologies that work together that really lets you continue to leverage all your existing investments and all the data and all the technologies that you already have, including your data lakes and your data warehouses and your legacy applications and all of your data silos inside and outside of the organization and so forth. And it's really allowing firms to accelerate their time to value for these kinds of customer-facing initiatives. So, it's there's a lot to it. It allows you to aggregate data from all your sources from inside and outside the organization. You can enrich it with market data feeds and external customer data and financial data and ESG data, and so on. There's capabilities that allow you to create these real-time programmatic workflows for next best customer-facing actions and so forth. You can embed predictive and prescriptive analytics for insights in your customers to really meet like all of these sort of scenarios around customer 360 that we're talking about. So again, there's a lot in terms of analytics and integration technologies and programmatic workflows and so forth. But really this area around smart data fabrics pulls together a lot of these enabling technologies, and we're seeing it now really being adopted rapidly in financial services.
Yeah, I wanted to stick with that just a little bit longer. I know the Smart Data Fabric's been a major innovation that InterSystems has sort of brought to the table. And I'm particularly curious in terms of particular applications of that technology as they might relate to customer service. Are there any things that your customers have done that works from a customer service perspective that takes advantage of that technology as well?
Yeah, absolutely. And so we see many implementations uh, uh, for customer service and customer 360. If you'd like, I can share with you, a couple that are actually in production with our customers. I'd be happy to do that. Yeah. So one, it's a really interesting use case. It's a large bank in Latin America. And they brought on a new, young, innovative CTO. And one of the things that he was looking to do was to look for ways to create net new revenue streams for the bank. And so what he found was that they can use data to offer banking services to a net new segment of the population, people that were completely outside of the banking system, but do it in a way where there was still acceptable levels of risk for the bank. Right. So they're using these technologies. So what they're able to do is they collect lots of data on these citizens that don't have any prior banking relationships. So there was no historical banking data on these people, but there was a lot of other data outside the banking system, including financial data from third-party sources and demographic information and open source data and so on. So they were able to aggregate all this data and build predictive machine learning models so that they could calculate risk profiles for these people based on the data that was available. And then they identified which people they wanted to offer credit and banking services to, and at what rates, right? So based on their calculated risk levels, so that it made financial sense for the bank within their risk tolerances. And then they then automated the customer onboarding processes to bring them in and onboard them. So it was really interesting. They found this really innovative way to create a net new revenue stream for the bank by tapping this new, previously sort of untapped segment of the population and doing it in a way where they're not creating unacceptable risk. So really interesting. I'd be happy to share other examples as well, if David, if you'd like.
Yeah, I just do want to say that example is really particularly interesting to me for a couple of reasons. I know, for example, Latin America is sort of experiencing a bit of a fintech boom relative to the rest of the world. So to hear that particular innovation is happening in Latin America is particularly interesting, all the more so because one of the reasons that has been said for this boom has to do with financial inclusion. And to hear this technology is being deployed for exactly that purpose of helping bring people who are unbanked into the banking system is really, really a fascinating example. Is there another slightly different example, maybe taking a look at customer service from a different perspective that you could share?
Yeah, I can give you actually a couple of different examples. And what was interesting about that first example is it actually wasn't from a fintech or a neobank. So it was from an established existing bank and being able to compete for net new business, which was really interesting. So one of our customers, they're a large investment management firm, and they're using us, InterSystems technology and a smart data fabric, to predict which of their customers are at risk of withdrawing a large percentage of their assets from the firm. So we do a lot of work with them. We just finished up this pilot with them. They're about to move it into full production, and they're forecasting based on the subset that they ran the pilot on, that moving this application and these machine learning models into production against their entire client base will allow them to identify $300 million in assets under management that they think are at risk of churning, so that then they can go and intervene and prevent those clients from leaving the firm. So that's a different example. And then there's actually a third example, which is really, I want to share this with you. This is really sort of a feel-good example. So one of our customers is a large credit union, financial center, First Credit Union. And this is really around what they do to ensure customer satisfaction. So the issue that they were having was that during the pandemic, they knew that some of their members would be having financial problems, either with health issues or layoffs or and so on. So, but what happened is when the pandemic hit, they had to close all their physical locations, and that was the main way that they interacted with their members. So losing that face-to-face interaction with all of their members, that was a problem. And so they worked with us. They needed to find a different interaction mechanism, a different way to identify which of their members were having issues and would need help from them. And so this credit union has been a customer of ours for years. So we were already helping them in terms of accessing and processing and analyzing all their customer data. And they had their operational data and their financial data anyway. So they worked with us and they enriched all this data that they already have with additional financial data from third-party sources and other data. And then similarly, they worked with us to create a set of predictive machine learning models, but it was different, right? This was to identify which of their members were at risk of having financial problems. And then, to your, Virginia, to your point earlier, it's not all about tech, it's also organizational. So one of the things that they did in addition is they created a new customer support team that they called the We Care Initiative. And then this team proactively reached out to their members that the machine learning models identified that were at risk of having financial difficulties to see how they could help them, whether that was by changing their loan terms or letting them delay payments and so on. And so as a result, their client satisfaction rates soared. But what was really interesting is that in addition to sort of, boosting client satisfaction, they have now had their 3 best years on record in terms of their financial results. So I really, really like this story because, they did well financially by doing the right things to help their members through a difficult time. So just a really nice story in terms of the business benefits that you can gain by just doing the right thing for your customers.
Yeah, those are 3 incredible stories. Actually, very, very good examples, I think, that people can take with them and really understand the real impact that embracing this technology can have. Virginia, I wanted to turn to you, looking more broadly, same area, but looking more broadly. Are there organizations that you see in your experience, in your research, that are edging ahead of the competition in the same sorts of ways that Joe's talking about in terms of really taking advantage of this technology to really bring about a really something special in terms of customer experience?
Yeah, I mean, I'd say it's less, again, I'd put it back to culture and embedding data within an organization. And that's where I see, obviously technology is a big part of it, but before the technology comes and before you make the decision on what technology you want to use, you have to have a very coordinated approach to it. And for example, I can think of a tier 1 large global bank that has managed to effect very, very efficient changes across its organization, even though it's quite a complex organization. There's many different regions that, these many different complexities to working within a data and operations team in such a large organization. But the bank has married its data and its digital team together. So their chief data officer and their chief digital officer work hand in hand with each other. And they have developed this internal team that's charged with working on all of the data projects to be able to build them together, to be able to change and to move forward with the digital transformation agenda they have. So the focus of both units is on reviewing the technology they have, seeing if it's fit for purpose, maybe going out and looking at solutions such as maybe the ones that Joe was talking about, understanding how that that technology works, how it could be applied within their own organizations, and focusing on delivering competitive advantage. They also pull in subject matter expertise from the business lines as well. So it's communicating with the business units that you'll have to get on side with any kind of digital transformation. So this team is really like a hub of innovation for the organization, and it's actually delivering change by engaging with the business and proving that data strategy is delivering competitive advantage. So if your data strategy isn't doing that, then what's the point of it, if you could ask? But certainly that's something that I think is very effective. And it does take that sort of C-suite leadership to be able to make that decision, to be able to pull all of the different components together and have the power within the CDO and the CDO, as they're both CDOs, to be able to work together and actually change things. And I think the industry can also learn a lot from other sectors in terms of, hyper-personalisation, how to effectively target different demographics. I think as we digitalize things like, digital assets, tokenizing real estate, for example, these products are changing investor expectations. And I think we can learn a lot from how, for example, the book industry has changed from, digital, from fully physical things down to digital things. We can learn many lessons from how Amazon worked, for example, in that respect. And I think investors at the end of it, or retail consumers, people that want to bank with a certain bank, they want that process to be seamless. They don't want to be waiting days for reports. They don't want to be having any kind of friction. They want to be focusing on accelerating the chain of communication. They don't really care what the technology is under the hood. Let's face it, that's the problem of the organization, and that's where I think we need to focus on the end client, is making that journey, that life cycle, as painless as possible. And I think we're on our way, but it's going to take a while.
Absolutely, absolutely. Very interesting. We've had a really interesting conversation today. We've got a couple of audience questions that I think we might have some time to put to you. And I think some of them are actually very, very good in terms of the kind of standard question I think a lot of folks might have listening to this conversation, saying, sounds good, I love it, but. And here's one of those but questions. We want to improve our services, but budget remains an issue. Do these new technologies connect to our existing tools? That sounds like a fairly common sort of problem that a business might present. Joe or Virginia, whichever of you would like to take it first.
Sure. Yeah, I'd be happy to answer that. Yeah, and all of our prospects and customers ask us exactly that question. And so that absolutely, and we talked about a smart data fabric. That in particular is non-disruptive. So it connects to all of your data silos, applications, but also your existing data management implementations, things like data warehouses and data marts and data lakes. So absolutely, they're non-disruptive, and you want it to be non-disruptive because you don't want to do any rip and replace. You want it to leverage, all of your existing data silos and technology investments that you already have in place.
Let's see. Another question that we have, again, I'm going to read this one verbatim because this one also does sound like a very typical type of question that you would get. And this has to do with implementation and the service. Once implemented, what level of self-service could we achieve within the organization for our data users to ensure we can make quick decisions? I could see that very much being an issue that people would be concerned with. Once we get up and running, how much of this can we handle on our own and be nice and agile and so forth? And again, Joe or Virginia, whichever, would you like to tackle that one?
Sure, I'd be happy to start, and Virginia, feel free to add. So self-service is huge, and there's many ways that we work with our customers to enable the level of self-service just that they desire. So we will handle a lot of the sort of operational, and if it's running the cloud and managed service and things like that. But for the parts of the business and the capabilities that they want for self-service, there's many ways. So there's internal dashboards, there's alerting. It can integrate with your current applications and processes that are exposing self-service workflows and so forth to your people inside the business as well as your customers. And then, there's a level of customization that some of our customers want. So they want to be able to easily add new data sources or add business rules, change existing business rules, create new reports, new workflows, new alerts, and so forth. And so, we can expose just those things that each customer for each particular application requires in terms of self-service, and then we handle the rest.
Technology really has to be able to deal with that spectrum, though, right? From the business user that wants to some, very specific request on that needs a dashboard for a particular thing, up to a power user that really wants to tinker with data and do a lot of things in the back end. So you have to really understand that user community is quite broad.
That's a very good point. And speaking of the breadth, I think might be a good place for us to turn to this final question, which I think opens up the conversation a bit more. It touches on both of the things that you've said just now, as well as the point, Virginia, you made very early on about the role of hybrid in terms of human and digital technologies. And the question is exactly that. Should there be a balance between digital and human when it comes to customer service? I would ask that, what does it mean to have that balance? And as I think you might have been alluding a moment ago, that balance might be different in one institution or one organization or one culture than another. I wonder if maybe you could elaborate, both of you elaborate on that a little bit.
Sure. I can take that one first. I mean, in terms of, I think we've been talking about this a lot in the industry over the last year or so, given the development of AI and the rapid focus on digital interactions and computers and what role should they play in our lives. But I think the balance is really what the end consumer is comfortable with. They may be happy dealing with chatbots and things to some degree, and they may be happy dealing with some digitized processes. But if they want to speak to a human and they want to deal with a human, then they definitely should be allowed to. They shouldn't be prevented from having those questions answered at the end of the day, because that's a point of frustration and a point of friction between your clients and your own organization. So I think we really have to get better at understanding what's appropriate and where it's appropriate. I think that's over automating can be just as potentially problem causing as not automating enough. So I think that's something we have to really think about going forward in terms of our operational strategy and our focus for what AI can and can't do. And also there's ethical considerations as well, risk taking, what regulators are keen for us to be assessing. I think where technology can help is where it's supporting a human in making decisions and serving up the data as and when you need it to make the best decisions. And that's really where I think AI comes into its own, and other analytical technologies, and all of that requires a very strong data foundation, as we all know.
Yeah, I agree with all of that, and we see that as well, right? So, some use cases demand real-time programmatic workflows, right? Like some implementations of customer onboarding, or certainly fraud detection, where there's no time for having a human in the loop. But there's many use cases that require having your people in the loop, right? And so what we do a lot is we try to have the software provide actionable guidance to the right people, very often based on advanced analytics, prescriptive analytics, right? But we're providing that insight into into different actions with the trade-offs associated with each to the right people in the organization. But ultimately, it's up to the employee, whether that's a salesperson or a customer support rep, to have that interaction with the customer, the prospect. And for us, that's totally up to our customer to decide, right? Technology can support both scenarios, and that's really sort of a strategic issue. And the technology can support the right thing that the business decides. But I agree with Virginia. It's hybrid, and we see scenarios that require either or both.
Excellent. I'm afraid we're running about out of time, but I thought maybe before we did, we could have maybe each of you wanted to share maybe a top takeaway or two from the presentation today, and then maybe we'll, as we go away, maybe wait that people can find out more information, get in touch with you, learn more about the research that you're doing, Virginia, the work that you're doing with InterSystems as well. But I thought before we did that, maybe if there was just a final takeaway, parting message, so to speak, that you might want to give to our audience as a takeaway for today's conversation.
Sure. So first of all, I thought this was great. So Virginia and David, as always, thank you. I thought this was a really insightful discussion. So, going back to the sort of the top question that you were talking about, what we see in the market and from our customers is that customer engagement and what we call customer 360 really is top of mind right now. And there's no, one silver bullet. It really depends on strategically, what's important to the organization, and working closely at a strategic level in terms of sort of the business climate and what's possible organizationally, and then using technology to enable, based on sort of the strategic aspects of what's going to move the needle. And then the other thing is we see a lot of experiments. So, there's a lot of sort of experiment going on and experimentation going on, and moving fast and trying different things and monitoring the outcomes and being ready to sort of experiment and pivot. So, in large part, that's what we're seeing in the market right now.
Sure. And for me, I'd just say, I'd reiterate that cultural change is just as painful as technology change, if not more to some extent. So make sure that you're putting the structures in place to support any kind of change, any kind of data first program of work as part of a digital transformation really needs to have the support from the C-suite, but it also needs bottom up support. So you probably want to have the business engaged regularly to be able to make that successful. And as we all know, when it comes to next generation technology, I think we put a lot of stock in technology and we forget some of the time that it needs a lot of support. We expect a little too much of things like AI to begin with, and data is all important in that. So I think data first is definitely something that you should be thinking about if you're thinking about a long program of work related to transforming your business. Think about your data assets and how they're managed.
Excellent takeaways. Just lastly, for folks who want to learn more about InterSystems, for folks who want to learn more about Firebrand research, how can we best direct them? Joe, InterSystems, how do folks get in touch and find out more about what's going on with you guys?
www.intersystems.com/financial services.
Fantastic. And Virginia, for folks who are curious about the research that you do at Firebrand, how do they get in touch, learn more?
At www.fintechfirebrand.com. There we go. Hard to say, but memorable, hopefully.
And worth the visit. Thank you both very much for a very insightful conversation. Again, it is all the time we have for today, I'm afraid. It's been a fascinating conversation and one that I'm sure is going to continue. I remember back in 2018 saying it was the year of the customer, and here we are in 2023, and it still is. So thank you both very much for your insights. Looking forward to talking with you again. Thank all of you for joining us as well. Have a wonderful day and a fantastic week.